Hello and welcome to SKEW Volatility 411. My name is Dan Deming and I'm with KKM Financial. We're looking at the VIX cash holding pretty steady in the 24 handle for a second day in a row. We did see it trending lower earlier in the week, but yesterday's selling pressure in the SPX followed up by further selling pressure today has now pushed the VIX cash back towards the top end of the range for the week, as I mentioned, in that mid-24 level right now. Week over week, realized volatility, short-dated realized volatility holding pretty steady for a second week in the mid-20 level as well. We're seeing short-dated realized volatility, 10-day realized volatility at 25. SKEW index, 128 today, but trading anywhere between 123 to 130 these last several sessions. So we continue to see that holding at the low end of the range. You have to go back to November of 20 to see the SKEW index holding at these current levels. So we are seeing demand for way out of the money puts in the SPX relative to demand at the money options continuing to shift for a couple of weeks now. Looking at the futures market, the VIX futures market, as we moved into expiration next week, we are seeing the futures market shifting higher today, maintaining contango as far as the term structure and holding a premium to cash even at these elevated levels. That roll market between February and March is still plus 50 cents today. Let's look at the options activity in the VIX options, and we're seeing pretty heavy activity in February options to be expected as expirations next week. The big strike today, though, traded was the Feb 21 puts. We saw 15,000 those go up today, so that's the most active strike in February. Also, a May put tree went up for the 17, 18, and 20 puts, I believe, were the strikes on that May put tree. Next week, I want to point out we have several things that could influence the vol structure, expiration being one of them, data points highlighted by PPI, and we also have Fed minutes next week, and there's a lot of Fed speak. We did see what the Fed speak did to the market yesterday. That could continue as we move into next week.